You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cashflow podcast. Now, here's Kevin Buck.
All right, guys, it's my honor to introduce my guest for today's show, founder and lead strategist of Blue Spruce Holdings and a great friend, Adam Adams. Adam, how you doing today, my friend?
I'm fantastic. How are you?
Yeah, I'm doing great, man. I'm doing great. It's always great catching up with you. I know I've been on your show multiple times, and I don't know how that we got to this far along to where you have not been a guest on my show, but it's here now. Today's the day, and we're going to extract some great information from you, my friend. So I'm looking forward to discussing your business on the multifamily side. I know you've been doing it now for a number of years, and you just got a lot of irons in the fire, lots of great things happening. And so what I'd love to do, Adam, is for those folks that aren't familiar with you, take a few minutes, tell us a little bit more about yourself, about your background, and ultimately how you got into multifamily investing.
First off, before I share that, I'm honored to be on. I've been a listener of your show for at least 4 years, at least 3.5 years for sure. And I always respected you, grateful to have you as a friend, being a mastermind with you. And this is such an honor. And then I will share a little bit about me, just enough to give context. I don't know if I need a few minutes, but I will try to bring people along where I've been and what got me to here. First off, I grew up in Utah, and when I was about 5 years old is when my mom started dating my now stepfather. And he's been an entrepreneur his whole life. He's had real estate all over. So he's done and still does land, multifamily, single family, small multifamily, self-storage units. He's been doing a few different things and an entrepreneur, and he's always been on my case since about the time I was 5, and I started watering plants for him to make $1 an hour. And yes, he did pay me, but since about then, he's always been on my case and saying, you got to save 10% of that, you got to invest 10% of that, and you got to tithe 10% of that. So since I think he found that in a book. I might have been Richest Man in Babylon or another book that kind of came out around the same time. But I remember thinking, like, if I take my $1 that took me a whole hour and I put 10 cents here, 10 cents here, and 10 cents here, 10 cents is not very much. And what am I going to, like, I have only 70 cents and most things cost $1. You go to all $1, you can't use 70 cents. So I thought it was sound advice, but I thought it was something that I wasn't going to need to think of until I was old and boring like he was. And that's when I could start doing 10%, 10%, and 10%. And I realized that if I would have started when I was 5, I would have been much better off at around the time of college. At any rate, in 2005 is my first real estate deal. So now it's been quite a while since that first one that I personally did. It was a tax deed. I bought it for $100, sold it for $12,000. At the time I was bartending and going to school, and that was half of my year's income with that one transaction. So I was like, maybe I shouldn't finish my music degree and teach people for a living because this real estate thing's pretty cool. So I finished up a degree, and I've been doing real estate investing ever since 2007, repositioned a property as a property manager, made the owner $1 million, literally $950,000 in 12 months. And, I've just had the bug of commercial real estate ever since, bought my first multifamily in 2008. The crash hit me. It went down for a while. It was a struggle. My tenants, my residents had a hard time paying their bill, but I was able to get out of it without too many bruises. Mm-hmm. And fast forward to 2015, did a bunch more tax deeds, tax liens. I did actually do a mobile home, not a park, but I did a mobile home. And learned a lot about what goes into mobile homes and how old they are, what year they were, built in order to get a FHA loan versus a commercial loan, if they're attached, all this kind of stuff I kind of learned on that deal. And where all of this has taken me is I'm focused now on multifamily syndication. And so I've done 7 deals so far, and I have the 8th under contract.
Well, fantastic, man. Congratulations. I mean, especially being that you started with it sounds like you started, you did your own first deal, that tax lien, and then you got into the property management side, and then ultimately dabbled in a bunch of different areas of real estate. And but you made it through the downturn. I think that's one of the most impressive parts of it. That was a struggle for many people. And unlike common theory would say, rents don't always go up, and tenants don't always, they always don't figure out a way to pay for that roof over their head. And so things got a little challenging, and even in the rental space. It sounds like you made it through somewhat unscathed, which I wish I had that same story. Unfortunately, I do not, but we all live and we learn, right? And we carried the battle scars forward, and we extract the lessons from them, and improve on a daily basis. But with that, Adam, I want to dissect a piece of that introduction there regarding the time that you spent as a property manager for 12 months, where you made your boss at that time, or the landlord, the owner of the property, you made him basically $1 million in a period of 12 months. And I'd love to talk about that angle, because I think that's an approach that a lot of folks probably miss, as far as when they're ready to get started in real estate. They don't really think of that as a possibility of getting their foot in the door and getting a foundation set. And so, was that the reason that you ultimately jumped in as a property manager? Was it with the bigger picture in mind, saying, hey, like I want to do bigger deals, and this is a way for me to get paid while I also learn? Was that kind of the approach you were taking, or did you have another thought in mind?
No, that's 100% the approach I took. I'm dyslexic, and I never wanted to read any books. And one of the books my dad just held in front of me so many times was Rich Dad, Poor Dad. He always tried to get me to play Cashflow, and he always wanted me to read Rich Dad, Poor Dad. And I was like, Dad, you know how hard it is for me to read. But the day that I bought a property for $100 and I sold it for $12,000 and made $1088 after commissions, I was just like, how the heck? I need to figure out, what is going on here. So I grabbed that book and I forced myself to read through it. And I'm one of the people, and I recommend other people that listen now to be that person too, because it's helped me a lot in my life. When I read Rich Dad, Poor Dad, I didn't just try to get the lessons that Robert taught. I tried to think, well, what is Robert doing? What made him successful? Not just what is he telling me to do, but what is he actually doing? Well, he was branding himself, and he was syndicating multifamily. He wasn't fix and flipping single family homes. He was syndicating multifamily. And I thought to myself, wow, if I'm going to go straight into multifamily like he did, I'm going to have to figure out how to even do this, because I don't want to lose millions. So I've got to learn with someone else's money first. So just like you said, that's exactly the reason why I started. So I called around places around Provo. So I was going to school in Utah, and I was calling around different apartment communities and saying, do you need a property manager? Because I'll live there, but I want to live there for free, and I want to manage your apartment building so that I can learn, because my ultimate goal is to be an investor. And this guy named Reed Quinn, I think something that I said, or the way that I said it, resonated with him, and he was like, yeah, I'll do that. Come and be my property manager. I'll teach you everything that you need to do to lower the expenses of this unit, of this building, and everything that you need to do to increase the income. And so we did things like we took out all of the laundry and put in brand new laundry. And it was nicer, it was bigger, there was more units, and it cost more. Instead of being 50 cents, I think it was $1.50. And every time a unit came out, I went and tiled it. Instead, I took out the laminate and I personally tiled it. The first one didn't look too good. And I did the same thing in the bathrooms. I took out the old subway tile and I put in new travertine tile. myself, and got new plumbing fixtures, new light fixtures, and they started renting. The 3 bedrooms went from like $500 to like $915. And so it changed his NOI, or his net operating income, pretty fast. And based on the cap rate in that area of Utah, he sold it for quite a bit of money.
That's fantastic. Yeah, so it sounds like you renter-proof those units with all the tile. I love that. We used to do that to our single-family homes. It's very challenging for a renter to tear up tile, and it's very acceptable, especially down here in Florida. A lot of folks really love when their entire home is tile. So, in any event, let's talk about getting started. The folks that are listening in that. You can't really get on Facebook or Instagram today without seeing some type of real estate investment opportunity, and it seems like multifamily is kind of in the headlines. Maybe that's just because most of my friends on Facebook are investors and they're investing in multifamily, but maybe that's the reason why. But in any event, it's very popular now, and it seems like it was something that was somewhat under the radar, or kind of reserved for larger players, right? Larger real estate players. But now, you find folks that are just getting into real estate, and they're literally syndicating their first real estate deal ever. They're not starting with that $100 tax lien. They're not starting with a small fixer flip or buying a single family home rental property. They're jumping in with the big boys. And so I want to talk about that, and I want to talk about what advice you would give to someone getting started in an environment where cap rates are very low. There's lots of competition, lots of private equity in the space. I see a lot of sellers asking for literally hard earnest money up front, which is very challenging pill for me to swallow. And so talk to me about all the different elements involved in today's world of multifamily investing. And I guess the biggest question, is it the right time to get started today? Would you suggest that a new person that wants to dive in, that they dive in today?
Love the question. It's very loaded. There's a lot of
there was a lot of questions there. I'm sorry.
There's a lot of parts to that. I'm going to start with your last question. It's fresh on my mind, and what I think that is, should somebody new be getting started in multifamily syndication today? And I have a 2-part answer. And number 1 is the person listening needs to find their niche, and there are red oceans and there are blue oceans, and there is an asset class out there called mobile home park investing that is much more blue than multifamily today. It might be purple now, who knows? But the point is, there's assisted living out there. It's very blue ocean. You go to assisted living big conferences, and you'll notice that almost everybody in there wants to get their first deal. Very few of them have done more than one. And so the first thing I will say is, if you're listening and you're wanting to decide where to go or how to go, think about your competition a little bit, think about cap rates a little bit, but also begin with the end in mind. I love multifamily because I know that when I buy it today, there's still going to be a ton of people that want to buy it 5 years, 10 years, 15 years from now, because it has been and always will be a great asset class. So begin with the end in mind, but you've got to find your niche. And I would recommend that you find a way to niche down into an asset class that makes sense for you. But if they decide, if you're listening and you want to get into multifamily and you're thinking it's too competitive, it's too this, it's too that, you'll definitely not do well at it. But if you go into it focused on what are the ways to do this? How can I align with somebody who's already doing deals? Because if I do my own 200 unit deal and I've never asset managed in my whole life, you're probably doing the wrong thing, because there's so much that happens. There's so much knowledge that you have to already have. So I would say first align with somebody else to make sure that the asset will perform the way that you want it to perform. Make sure you learn and educate yourself to that asset class. But if you have the tenacity, you can build a team like I have, and there's 12 people on our team that allow me to be able to close on these deals. If it was just me and one other person, one partner, a spouse, whatever, I think it would be very much swimming upstream. But we've decided to not think of it as dabbling and having fun and just random. Maybe we could try this out. We've hired a pretty big acquisitions team. We've trained them. and we make sure that we're going to be pulling in deals. We have 2 people on our asset management side. We have 2 people on our raising money side. So if you are doing syndication, you absolutely need to be raising money. People say out there, they always say, if you find a good deal, the money will automatically follow. And I've seen that with a few single family houses, but I've also seen people with single family houses that is a great deal, but they can't bring the money because they haven't prepared it yet. That happens even more with syndication. So unfortunately, I have seen other people beat their head against the wall to try to call brokers. The broker knows that they've never done a deal, so it's really hard for them to get that first deal because they haven't yet aligned. They don't know, they haven't closed on one before. And then the problem is, even if they get one, they don't understand how to raise the money. And they think, they've heard that if you just have a deal, you just can easily raise the money. But you really got to prepare that ahead of time. Some of the relationships take 2 or 3 years in order to start investing with each other. So I would say if you want to do it, you can do it. Absolutely can do it.
It's a mindset. I mean, what I'm gathering there, it's all about mindset, right? I mean, what I like to say is that timing is everything in real estate, when you're buying real estate, also when you're selling real estate. But when you're on the buying side of things, which is what we're talking about here, getting in and getting your first deal done, whether it be mobile home parks or multifamily or shopping centers or senior living, what have you, self-storage, you can pick any asset class. There's always an opportunity out there. It's your job to get in front of that opportunity and be prepared when it presents itself. And the only way you do that in a very competitive environment like we're in today, and again, mobile home parks are getting just as competitive as multifamily, is you gotta turn over more stones. You got to turn over more stones. You got to be out there. You got to be building those relationships with brokers. You got to be dealing with owners directly if you can. You got to be doing all the above, and you've got to have a team behind you that is basically multiplying those efforts. But it really comes down to the mindset, knowing that there is an opportunity out there, and it's my job to find it. Would you agree with that?
100%.
Yeah, I love it. Well, let's talk about the team side of this, because that's a critical element of anyone's business. If they're a successful syndicator, and typically it's not just a one-man show. Very rarely is it ever a one-man show. And if someone tells you that it is, they're probably not telling you what's behind the curtain, because there's probably other people behind the scenes that are helping get it done. Just like we have a team. Adam, you have a team as well, and you spoke to having, I think, maybe 12 or so people on your team. I'd love to, maybe just from a high level perspective, give us kind of the most important positions or what those positions look like that basically help you bring it all together.
Yes. There are many parts, and I will try to give you the best breakdown. We have 3 main parts, and one of them is asset manager. One of them is money raising. And one of them is acquisitions. Those 3 are some of the most important. You can hire out the rest, but if you have an asset manager, a person on your team who's raising the equity, and a person on your team who's bringing in the deals, you have the core 3. And after that, you will probably need somebody to be underwriting. Now, if that acquisition manager also is good at underwriting, that's a win-win. Or if that property manager or the asset manager can also underwrite, you have a win-win. So in our team, we have the core 3, DJ, Manny, Adam. And then on top of that, we have other people to fill in the other parts that need to be done. And they're all very, very important. But we have an engineer who is our underwriter, and he underwrites multiple deals every day. Since we added him, we realized that there was more things that needed to get done administratively. And so we brought in an admin manager who can take care and make sure that a lot of those T's are crossed and I's are dotted. And then we also have on our team, I have a personal assistant that I need to have a personal assistant to make sure that things are taken care of, because I think
you need 2, Adam.
Yes, I probably need another one. In fact, I literally was yesterday. I told my assistant, I said, we need to hire one more assistant, and I need them 2 full days a week. I need them all day Tuesday, all day Wednesday, and I want you to hire them, and you can be their boss. But I know we need one more person, at least part-time. So that's already kind of happening. But outside of that, we brought in 4 more pre-underwriters. So they will, once the acquisition person makes connections with the brokers, the deals go straight to these 4, and they will make sure that all of the paperwork, all of the rent rolls and everything else that we need in order to underwrite is there. They'll put the numbers in the spreadsheets, and then our lead underwriter will take it from there. So that way we feel like our acquisitions has been slow while we've been preparing and getting the properties that we already have going, make sure that they're stable. So we brought on 4 more people so that we don't have to focus so much on the the people that are already focused on the asset management don't have to focus on acquisitions. And we also brought in 1 person to assist our CEO who does all of the asset management. So now there's 2 people doing asset management, and that's what our team looks like. That we also have a couple people that I didn't mention that make up the rest of the 12 that are net worth and liquidity partners. So so we have an $11 million project under contract, and to close it, we need to have at least $11 million net worth. But my team didn't already have that, so we partner with somebody who is on the team and signs on all the loans because they have much higher net worth and liquidity. So that's really what it looks like in our business.
Got it. Fantastic. Well, I appreciate that. And you're speaking to the asset management side of the business. I know that you guys use a third-party management company to oversee the day-to-day of your assets. And so the asset manager is essentially managing those management companies. What is kind of the threshold of an individual asset manager as far as the number of units, or maybe it's the total number of properties, apartment buildings that they can manage before you need to bring on that second individual? Do you guys kind of have a built-in threshold of what that looks like?
No, we don't. But as we were managing 4, that's when we decided that it would help a lot to have somebody else. So I don't know what other teams do, but it was our 4th one where it was very, each property, you have a lot of phone calls. Like every day it's putting out fires every single day on different properties. So it's like to make something happen, you're on the phone so much that it can be difficult to get other things done. So that's when we brought in the second asset manager on the team.
And I'm guessing that a lot of these projects that you're purchasing, I mean, they have a value add component to them, some probably greater than the others. But there's always, in the beginning stages, there's a good deal of rehabs that are happening, both on exterior and interior of the units. And so that in and of itself takes up a lot of probably the asset manager's time when they're overseeing or working with the property management company to oversee these big CapEx projects. Is that correct?
Yeah. Our first few deals were our first few were a little bit smaller, and a couple of them didn't need a lot of upgrades done to them. There wasn't a big CapEx. The 250 that's under contract as we're recording this, that'll need quite a bit more, and so we're prepared for it. We brought a couple more people on the team that have accomplished that before. Since what we've done is usually a bit smaller and didn't need so much, we actually brought 2 people on the general partner side that have done 3,000 doors or more, and some have done 800 just in that city. So it's super important to make sure that you can handle it. That's why we are partnering with other people to make sure that it does happen, because the last thing you want to do is lose investors' money. Yeah,
no, absolutely. And I want to dissect that a little bit, but there's another question I have regarding the rehab side of the business. And how do you, on a project, speaking to like the 250 unit that you currently have in contract, how do you determine how many improvements to make as to not over improve the facility, right? I mean, you can easily, when you talk about 250 units, you can easily spend an extra $100,000, $200,000, $300,000, sometimes even $1 million, right? The money starts flying out the door. And so how do you hone that in to a very precise number to ensure that you're not over improving, but yet you're going to be able to essentially capitalize on the, on that market and get the, most amount per square foot for that unit as far as rental is concerned?
Yeah. So that's done by other people on my team. So Manny and I did a bunch of fix and flips together before we started doing this. And he really focuses on comparables. So he goes and tours all of the other properties. And what he's looking for when he does that is he makes notes of the color of paint. He makes notes of the tile, which ones have tile, how many square feet they are, how many bathrooms, how many bedrooms, what is the level of light fixtures, what about the countertops, what are they doing to their countertops, and of course, what are the rents that they're achieving with that. So that's Manny's focus when he's visiting the comparables. When by comparables, in this case, I mean all the other multifamily apartment communities that are within a half a mile radius, that are within your A class or B class or C class property that you'll be buying.
Mm-hmm.
And he spends a lot of time notating what does it look like exactly, what are the amenities, and what are their rents that they're achieving. And so that's his job, to focus on looking at our property and not going anywhere past any of those others, but to just focus on, okay, we will need to upgrade the countertops. We will need to put in vinyl plank flooring, and we will need to put in new baseboards. And those are the three things that it will take. And so with Manny and the property manager, so we usually hire bigger property management companies. Now that we're going a little bit bigger, we're getting national recognized property management companies that are in a couple different states, and they have a really good footprint where we are. So with Manny and the property manager walking, they start to make notes, and then the property manager puts that list in front of contractors. We get bids, and that's when we start to determine it's going to take $3,200 plus a 10% leeway or 15%, and then we'll hire these people, and this is how long they say it's going to take, and the rents that we can achieve are $110 more by doing that. So it's in their hands, but that's the process that they do to understand.
Okay. So that's once you have something under contract. How about like prior to actually writing even an LOI or writing an offer on a property? Are there some popular resources that you guys use to to help you quickly do back the napkin, like any specific websites to where you can find out what the average rent per square foot is in that marketplace, what the vacancy is, and all the above? I mean, there's lots of, the demographics within your particular market that you might be looking at as far as where that property is located and the half-mile radius around it. Do you have quick go-to websites that you utilize?
There's one that comes to mind. There's two that come to mind right now.
Mm-hmm.
But I know that we actually use 8 or 10. I don't remember if it's 8 or 10, but there's a lot of websites out there. But CoStar, you can go to apartments.com, which is owned with the same company as CoStar. They even have a similar logo, but apartments.com you can tour some of the properties.
Mm-hmm.
As far as what we normally do is we download a report for the area with CoStar, and that does cost a good amount of money to have CoStar yourself. But just as a hack for anyone who's getting into this, if you can align yourself with a really good broker, this is a commercial real estate broker, Berkadia, Marcus & Millichap. There's other companies too. I don't mean to leave any out or personally name too, but if you go to a company like that and you have you can have a good relationship with them, they will literally ask you, what parameters do you want for your report? And you'll give them all of the parameters, and they can actually print you out something. It's pages and pages of information. That can be a really good resource. And it's not that you necessarily have to already be paying for it. You could align yourself with a broker.
Got it.
But apartments.com, you can kind of take some tours. But honestly, there's no substitute to really dive in than to be touring your property and the comparables around the area.
Yeah. I'm just thinking from more of a back of the napkin. I mean, if you're looking at, if something comes across your desk and it might not be in a market you're overly familiar with, which is the importance of like focusing on a few key markets, right? Is actually understanding the marketplace, understanding the dynamics of that individual market, because every market's different. But if something does come across your desk that's in a market you're not overly familiar with, how can you quickly assess whether or not it's an opportunity that you should spend any time on, or just, throw it in the garbage can and move on to the next. So I know with us, we've got a couple of back the napkin approaches we take. Bestplaces.net's one that we use that gives us quick demographics of the area, gives us median household prices, median household incomes, rental rates, kind of a range for 1, 2, 3 bedrooms or studios in a given area, unemployment rates, and all those different factors. It does not have information such as vacancy, for the different mobile home parks in a given region or anything like that. But it helps us, at least gives us some guidance as to where we need to be as far as our underwriting is concerned. And then we dive a lot deeper, just like you guys do, once we get something tied up. I'd like to go back. There was one other question I had regarding the renovations of a property. Again, we can speak to maybe the 250 unit or any of the other ones that you currently own. What are some of the more popular amenities that are commonplace now, where you get the best bang for your buck, that you guys add to communities, or that you consider to add? Such as maybe dog parks. I know playgrounds or barbecue areas or things of that nature. Are there certain ones that are kind of just you guys add to every different complex that you acquire?
There's no stamp that's been created and that's been easy to just go everywhere. But a couple that can stand out, you've mentioned a couple great ones. Others can be pet rent. And so sometimes you go to a community and they allow pets, but they don't charge anything different for the pets. But you can ask for a pet deposit and pet rent for the pets that are in there. So that can be a big one. It can be an extra, $50 or $100 a month, $25 at least, just by saying, hey, we will allow pets with monthly pet rent. So that can be a big one. The dog park can be a good amenity. If you have large enough bedrooms, so like if it's all 1 bed, 1 bath, you probably don't want to do this. But if it's usually 3 bed, 2 bath on your units, and you understand that as you look at the different tenants or the residents that are going to be in that building, that there's a lot of families, you can actually put in just a swing set, a playground, and allow for them to start to play in the area. Other things can be just adding washer and dryer hookups when it can be feasible to put in washer and dryer hookups. Even if you have a laundry facility on site, there's a lot of residents that don't want to haul the laundry out, and then make sure that they have put their clothes back on in time to switch it over and then go back and get it before someone moves it out and they get wrinkled or whatever. So having you can add for, sometimes it's only a few $100. It can literally be that low, and sometimes it's less than $2,000. But by just adding the hookups for a washer and dryer, and maybe even renting out a stackable unit or a pair of units, can be a giant help. There's a lot of people that miss the laundry. They go in and they're like, okay, there's no laundry. The laundry's over here. But they don't take a plumber to say, what would it take to add a washer and dryer? And if it's feasible, and that can be really helpful. Right now in one of our properties, it's a 83 unit. It's one of the smaller ones we bought a couple years ago. But on that one, I know that we have been having a challenge getting the rents up to what we thought we could have them. And so we're considering other things. We're opening our mind. What else might be coming here? And so one of the things that we did is decided to reach out to the tenants, the residents, to ask them if they would pay $100. Okay, so first off, we had to actually figure out how much it costs to put covered parking. And sadly, in that unit, we would have needed to have $100 a unit just to be able to make it feasible. And so then we put out a survey to every resident, and we asked, would you pay for covered parking if it's this? And it was fairly unanimous that they wouldn't. So at least we knew not to spend the money on putting that in. But there's all sorts of ideas that we have and that we have had, putting cameras out, putting a gate out just to attract a better tenant and to push away the riffraff. if we prepared, I could have listed like 30 different ideas that you could.
No, fair enough. I mean, I think we covered a great deal there, but I think the importance of what I just gathered from you there is ask your residents. I mean, do a survey. If you currently own a building today and you're trying to figure out what are some additional amenities that your current residents would pay additional for, whether it be a dog park, right? I mean, if you've got a little plot of land, I mean, a dog park is probably the least expensive thing to put in. Put some fencing in, some signage, and now you put a little poop bag area, and now you got a dog park, right? But survey your residents. I mean, get their immediate feedback. I mean, we do a very similar thing when we take over a new mobile home park. Is we go in and we do a resident survey, and we even, get their feedback as far as like CapEx projects. Like we go in and we see what we think we need that needs done, road improvements, tree work, just general cleanup. But we want to hear from them, the folks that have lived there for a long time. What do they want to see? What did this place used to look like that they really liked that they kind of lost over the years as it went downhill? What would they like to see come back? And ultimately, it gives you a lot of a solid ground of relationship with your residents. It gives you that common bond, and it makes it a lot more manageable when you do rent increases and things of that nature, because they see that you're working with them, you're giving them the things that they want, and it's a win-win all the way around. One of the other questions I wanted to ask you, we're running out of time here, Adam, so I want to be respectful of kind of our time stop that we have here. For the folks that are listening in that want to get rolling, I know that most of your opportunities, if not all of them, come from your different broker relationships. What would you say some of the, other than just someone literally going on the internet and Googling, multifamily broker or multifamily agent or commercial agent, Oklahoma City, Oklahoma, instead of them just doing a generalized search like that, what are some of the more strategic ways that you have found to find the brokers that are specializing in a given market in multifamily? And then what are some of the angles you take as far as approaching them for the first time?
Perfect. Okay. I have a good answer for that. So thanks for asking that question. So there's two ways that you can meet new brokers in an area that I love. And the first one that makes the most sense to me is to not call the brokers first, especially if you don't have a whole ton of experience. If you don't have a whole ton of experience, you want to usually align with somebody before you call the broker. And so what you'll do is you'll call property management companies first, and you'll reach out to you will Google biggest property management companies, and you will just call them and ask them how many units that they are managing, that they have assets under management currently. Mm-hmm. And then you'll ask them for referrals to brokers. So that's the best way that I would say to get to those brokers, because now you can say, oh, I spoke with this person from this property management company, and they said that you were the one to talk to. You always want to start a conversation like that out with a compliment. So they said that you were the one to talk to. And now it helps you to sound more credible as well, because you didn't just call them cold and say, I'm looking for anything above 5 units, anything A, B, C, or D class, anything that has value add of $100 a unit to $7,000 a unit. I'll just take it all. I need a deal. Instead, you're calling the property management company, you're aligning with them, and then you're using their name and saying, oh yeah, I just spoke with XYZ Asset Management, and they mentioned that you'd be a good person to talk to if I was looking for deals in this area. So that's a good opening, and that's probably the best way that I can think of. And hopefully we probably don't have enough time to go into all. I have a 3-call script. And so the first call is very short, and you ask them a few questions. So XYZ company said that you were one of the better brokers in this area. Mm-hmm. And then you give yourself some credibility. Me and my partner, whatever, have several doors right now, and we want to have a really good a really good broker in this area. So that's why I'm calling you. Do you mind if I ask you 4 questions? That's probably the best way to start it, especially if you're kind of new, because it switches the tables. It turns the tables. So instead of them asking you all the questions, you can just ask them a couple of questions and say, thank you so much. I will probably get back with you. I told you I only had time to ask you the 4 questions, but I'll probably get back with you. I'll let you go for now. And you just get off the phone. And now they haven't qualified you, but you've at least gotten gotten yourself in their mind. And you usually call again and you say, hey, John, it's Adam from Blue Spruce. We talked a couple of weeks ago, and it's been really rough to find a good broker in your area. Do you mind if I just ask you two really quick questions? It'll only take 2 minutes. And you just ask 2 questions, and then you get off the phone, and then you just say, thank you so much. I'm going to talk to my partners, but I think we're probably going to want to do business with you. Let me just double check with my partners, and I'll probably call you within a day or 2. And then 15 minutes later, you call them, and you say, hey, John, great news. I did speak with my partners. We want to go ahead and work with you. Go ahead and send us your deals. What's your best email? And I'll give you our criteria. So far, they've never had a chance to qualify you, but now you're going to send them a list of criteria, what you look for in these deals. But you're assuming the sale, which is the most important part. And then when the close, the end is thank you so much for your time. When you send that, I'm going to give it to my underwriters and make sure that we give you a response or an LOI within today. And then you hang up.
I love it. I wish we had more time to actually figure out what those questions are. Would you mind sharing them? Would you mind sharing them that I can give them out to the listeners, or is it proprietary? And I'll take this section out of the podcast if it is, my friend.
The questions are less important.
Okay.
Than your demeanor and how you control the conversation with questions. What questions you ask, you can come up with good ones, and it matters. We don't just have 4 random questions that always work. You just got to be thinking of them.
Gotcha. Fair enough. It's just all about controlling the conversation.
Yeah.
No, I love it, man. That's fantastic. Well, I know we're running out of time here, but I do want to go into the golden nugget segment of the show. This is where we're going to kind of wrap things up for the day, Adam. Then I'll let you go on your way so you can go buy some more multifamily properties.
Awesome.
So, what one final golden nugget of advice or wisdom do you have? You've given us a bunch already today, but if you had just one left in your pocket that you're hiding and you're kind of leaving to the end that might inspire and motivate our listeners as they progress in their multifamily investing career, what would that one last golden nugget be?
The blind should not lead the blind. You've got to align with somebody who's already in this business. If you want to be successful and make sure that your passive investors get their money as well, the blind should not lead the blind.
That's awesome. I love it. Adam, where can we find you? What's the best place to reach you?
Best place is just to go to my website. It's realbluespruce.com. Blue spruce is the Colorado tree. I live in Colorado. We are the Real Blue Spruce.com. You can get my bio. You can see my podcast and everything else that you want to do.
Got it. Awesome. Adam, it's been an absolute pleasure. I'm glad that we were finally able to do this. And it's been a lot of fun, my friend. I was hoping to see you here in Denver later on this week, but we'll cross paths here sometime in the very near future. So, guys, thank you for tuning in for this week's show. And until we meet again next week, this is your host, Kevin Bupp, wishing you huge success.